Happy Wednesday. See if we can get the boys on the hood here.
That there's still more room to the downside.
Yes.
I,
There's volume behind this.
I could see low 100s, 23,001 100s, like the lower 100s, like 130s, 120s.
Wow.
Nasdaq's only down 1%.
Hesitated
Putting
to
it in
short this
perspective.
earlier in pre-market.
Yeah, appreciate it. That's true, Dakota.
Yeah. Put it in perspective, right? Nasdaq's down 1%, and then we have like Nvidia down 2.5%, Tesla down 2.5% now. Amazon's down 1.8%. So there's still, we could be halfway. This could be only half the move so far.
Palantir down another 6% after 10% yesterday. Yeah,
how's the VIX looking?
190. What's up?
How's the VIX looking?
The VIX right now is up, but not like it's still at low. It's at 16.3. That's like where we haven't really seen the panic yet so far. It was hovering. It was below 15 last couple days ago.
I mean, it's up 4%.
Yeah, very aggressive.
Sure. I guess for me, it's hard to call anything panic when the VIX is below 20.
I agree. Very aggressive selling. First 20, 25 minutes into this New York session. Look at the 5 minutes. It's just been all red bars. Pushing lower here. Take a look at 10-year yield. It's 4.3%. Crude.
They have been remarkably calm.
What is going on? Crude. Now crude's getting smoked. Crude 62.42. More selling coming in here now. ES. New lows ES. New lows NASDAQ. We just broke into the 23,100 handle. Needs 6,400 even the ES. 63.95 just printed. Where is the selling? Where are they taking this to? Dakota, you're looking at 23,100 perhaps?
Yeah, 120s. The lower 100s. It's a zone, 120 area. Like, this is our pivot back from like August 5th, August 6th.
Damn.
Okay. We could just keep going. We're still only down 1.25%, so more room to the downside, I think. VIX still popping. VIX almost up 7%. So we're moving in that direction of
we are moving. We are alive.
Yeah.
Well, what we got here in the ES.
Yesterday I was talking with some of my guys, and I told them that at 22,600, I'll start buying back the market. Oh, there's a little bit more room.
Yeah, you see, there's been a couple hundred contracts come in and chase this market to the downside on the Nasdaq.
They're just hammering
level right here, right now in the ES at 63.88 around here. You can see them on the hour charts where we topped out a couple of times, bottom out a couple of times. All I got at the moment. That's also Hogs. Oh, sorry. This is last week's low too. Okay, this is interesting.
Somebody knows something. And
what?
Yeah, this is that symposium. Yeah, I'm hands off.
I'm with you, Doom. I'm with you, man.
The rumors I have seen coming out, which means they're not really rumors if I hear them, but like it seems that people are leaning towards apparently Powell, those that seem to know, is not going to give too much clarity on what they're going to do in September. He doesn't want to box himself in, and that in itself could add to the uncertainty.
He did this on FOMC too. He did this back in July as well. Definitely hit the data dependent. Definitely a little more hawkish tone. If you took a look at Fed funds, we were above a 50. I'd say 60% probability of a pause after the Powell speech or press conference back in July. Is that so? That's what you're seeing, Jack? That Powell is not going to show his hand.
No, I kind of agree with that too, because he probably doesn't know. They got to be data dependent.
Right.
What is up with the like? I saw those headlines just as I was coming on, but what is okay? So we got what are they going after Cook for?
Look at that. Look at that.
The name of it.
Wow.
All right, new lows here. More
Oh,
selling.
man.
Whoever in the
63.80.
chat, whoever caught this in chat, good job, man. Hold it.
What's the 10-year
Good
doing?
work. Whoever caught this, good work.
Yeah,
10
VIX
years
is almost
coming in
up
a little. The
8%,
yield
8.5%.
10 years cooking in the upside price wise.
I like it.
This is all right. We are locked in here on Top Step TV. Yes, we are locked in on these price move. Again, we are down about 300 points since the opening bell rang in New York in the NASDAQ. I'm now at 23,146. I got about a 40-point pop off those 146s. ES bottomed out at 63.83. And about 40, 45 points since the bell rang. It's just been red candle, red candle, red candle to the downside. There's been volume behind this selling. There is conviction.
Buyer's
The
starting to step
downside
in
here.
now a little bit.
Yes, they are.
My work is easy because I use ClickUp. Here's how I keep track of all my tasks. I start by brain dumping everything I need to get done and I'm going to do. Next, I set a priority and a due date to keep. Waited for speed. Yeah, oh yeah, a whole bunch of made up ridiculous terms. Good job, Wolf. Trading with the I lose money board. Oh, lovely stuff. Healthy, is it? Yeah, guys. So we set up. I'm waiting to see if we can't catch any accounts. Right. I'm not going to look for an enormous reversal out of this, but I think we can catch some nice buyers stepping in. Maybe we're going to continue lower, but even a halfway, three-quarters of the way back up to the top, you think that might happen. Aggressively lower. And really have not had buyers show up here just yet. Heavy negative CPC, delta, pretty imperative. Which is why I'm here with that. With the important note, right? I did that kind of quickly, but I think it's important to talk about. A really important skill set as a trader, right? Not entries and exits and trade back. It's a scrumpy thing on the price. And a really important skill set to start to develop is trading volatility. How much is pricing relative to how much?
Would be an environment.
This if I'm hitting with one mini the way that I was trading yesterday, and and a stop loss that is much tighter, or just way too much risk on, it doesn't make sense, right? Doesn't make sense to its own. Now, half of this is accounting for volatility, half of this is just being dynamic with risk management. Perfect risk management. But I think a really good skill set that you can develop is getting good feel for volatility and deciding when to size up, when to size in, right? Both on how much risk you want to have on the line, and maybe you want to widen down the stop loss. Maybe I want to have a stop loss in at $1,000, right? But maybe I want to run, a 20-point stop loss was appropriate yesterday, but a 40-point stop loss might make more sense. Based on market structure, price action, how the market actually. push to the upside. This is a massive dip buying opportunity. But we're not seeing that just yet. So I'm gonna try to catch a wick up here. I'll show you what I'm looking at right here. I want to see this trade out. Here's my take profit. Right here. I want to see this trade out really quickly. And I'm cautious. Let me bump that down through and go to grab all. Heavy negative CDP drops off like tonight here, and really haven't started to recover at all. All of that is anything to we might be in for lower prices here. So I caught my long opportunity, waiting patiently. I'm running this with low risk, and now I think I'm gonna get paid. We're going for a split. So I'm not gonna leave $500 risk on the line, right? If I'm not gonna go for $500,000 profit, and I don't want to. I think I'm really looking for starting to buy it. That's all that. Adjustment, applying discretion, articulating why, right? But this started to give me a nice bounce here. Started to give me a little bit of a bounce here, but I wanted to catch an immediate bounce and really immediate aggressive bounce. That's why I'm saying it's a little bit different than the longer hold, lower moving, build a trade on, let it play out. So the upside and downside trade is on myself. This one needed to react. Started to get it. We might still get a little wick up here, but I don't know. So I structure my risk. Risk-free trade, we're either going to make next to none, $8.80, or a buy. Now again, we can absolutely reverse from here. I applied discretion on this because not at all giving people that jump in with one of them. I'd like to take something second. Yeah, and I did not come to the table today with a super bearish bias at all, and that would have helped, but and I don't know, we could bottom out down here, we could buy buyers. There's a lot right here. It's a lot past 75s. Let's see, we get another dip down. I might try something similar, but I'm pretty cautious. Okay. Let's see. Smart what you're saying about yeah, like again, so here's the long guys, right? Long off level, sweep of prior week low. We can definitely find some buyers here. If I go yes, watch it on could definitely find some buyers here. I'm not saying that you don't. It's gonna start to reverse. But we wick lower, starting to come back off. See how that level came into play.
Yeah, let's do this. Let's do this. Mm. Let's do this. Why is Top Step not talking? Cut me off. Let me see again. Let me try it again. Nope, not working. Maybe because it's the other one. So we got two working to come here. Okay. Justin Kaka. How much are we risking there? That's quite a bit. Let's just cut it off. Got two working to come here. Let me switch back because this is very important here. Oh, why you not playing, man? You played the first time. Okay. Interesting. Why you not playing, man? Why? Why? We got 1 minute on this candle. What's it gonna do? We got 1 minute on this candle. What is it going to do? What is it going to do? Is the question. What is it going to do? 125. Excited. Aren't you guys excited? Third season of Top BIP. Top Step BIP coming up. Aren't you excited? Yeah. Maybe X trading. Top Step BIP coming up. We ran short. We ran short 3. Let's see what is it going to take. I'd like to do something. What is it going to take? What is it going to take, ladies and gentlemen? What is it going to take, ladies and gentlemen?
Estás a punto de dar el paso final para tomar el control de tu tiempo y
o vas a comprar patineta, scooter, bicicleta eléctrica, ciclomotor, etc. Mejor no te hagas el pendeje y ve este video. Si no quieres perder tiempo y dinero, les presento la ley 2486 del 16 de julio de 2025, donde lo único que les ha importado a los usuarios o a nuevos propietarios de este tipo de vehículos es el artículo 15, exención de requisitos para la circulación de vehículos eléctricos, donde no te van a exigir matrícula, o sea, placas, seguro obligatorio, o sea, SOAT, y licencia de conducción. Y hasta ahí todo perfecto. Pues no es así. Antes, este tipo de vehículos no estaban reglamentados. O sea que en pocas palabras, al no aparecer en el código de tránsito, digamos que eran como juguetes. Pero ya no es así. Ahora tienen una categoría para los agentes y policías de tránsito. Así que no se relajen, porque aunque no les pidan SOAT o licencia de conducción, no crean que no pasa nada. Y a ver si aclaro esto de una vez, para que entiendan la magnitud de esta ley. En cualquier entrevista, ya sea de radio o televisión, que me invitaban, cuando me hacían preguntas acerca de bicicletas eléctricas, scooter, etc., la verdad es que a mí no me llamaba la atención, porque en esa época era como comprar de esos carros para niños de 5 años. No hacían parte del código de tránsito, pero resulta que ahora ustedes hacen parte de mi comunidad, porque ya los regularon. Esa bicicleta que tienes o ese scooter ya no es un juguete, y ahora sí, agentes y policías de tránsito irán tras ellas. Leamos. Artículo 4. Sanciones por infracciones a las normas específicas para vehículos eléctricos. Ahora escuchen bien lo que dice a continuación. Adiciónense al artículo 131 de la ley 769 de 2002, o sea, el código de tránsito. Y los compañeros que tienen moto, carro, servicio público, saben de qué habla el artículo 131. Pero para resumir, es donde aparecen todas las benditas infracciones, tipo A, tipo B, C, D, donde la agente o policía de tránsito para al conductor, o bueno, la cámara de fotomulta. Infracciones tipo G. Será sancionado con multa equivalente a 6 salarios mínimos legales diarios vigentes el conductor de vehículo eléctrico liviano que incurra en cualquiera de las siguientes infracciones. Por si no quedó claro, esto no lo tenían antes, ahora sí. G1. Transportar a más de una persona de manera simultánea. No es como en las bicicletas de antes que lo podía llevar adelante o paradito atrás. No, señor. Si el vehículo no está diseñado o su ficha técnica no es para 2 personas, lleva su comparendo. Infracción G2. Circular por red vía nacional. ¿Y qué es eso de red vía nacional? Voy a dar unos ejemplos. En Bogotá, avenidas principales como Autopista Norte, Calle 13 o la 80, saliendo vía al llano, Ruta del Sol, vía Panamericana, etc. A menos que tengan una ciclorruta al lado. Pero sabemos que no todas cumplen con eso. Infracción G3. Circular sobre aceras, andenes, lugares destinados al tránsito de peatones o por vías en las que la autoridad competente haya prohibido expresamente su circulación. Igual como en las 4. No circular por cicloinfraestructura. O sea, lo que hacen varios ciclistas que no tienen motor, tienen una ciclorruta al lado, pero prefieren usar el carril de vehículos automotores para el caso de
Oh crap! Oh, what happened here?
Que puedes utilizar derecho pegado al andén, pero la infracción G5 dice circular usando carriles distintos al derecho o circular contrario al de la vía. Eso sí pasaba para motos, carros, servicio público, etc. Pero ahora también aplica para ti. Bicicletas eléctricas, monociclos, scooters, patinetas, no pueden andar en contravía. Pero ese tipo de vehículos es tan fácil poderlo hacer, hazlo. Y después me cuentas con el comparendo al lado. Es que hago un paréntesis aquí. Tú ya dejaste de tener las mismas ventajas de una bicicleta normal. Ahora haces parte del código de tránsito. O sea, ya haces parte de la comunidad del señor Peter. Si no quieres perder tiempo y dinero. Nada de andar por vías preferenciales o que son exclusivas del servicio público. Lleva su comparendo. No, es que yo no tengo licencia de conducción, no tengo ni matrícula ni nada. No necesitan eso para que el policía o agente de tránsito.
I knew it. Man, I thought I was long.
Máximo 40 kilómetros por hora. Ay, pero aquí ya soy vivo o viva. ¿Cómo un agente o policía de tránsito se va a dar cuenta si yo voy a más de 25 kilómetros por hora? Te lo muestro en este momento.
El 99% de la gente está usando ChatGPT mal. Prueba si tú eres del 1%.
¿Saben qué es esto? Sí. Una pistola de velocidad, donde un agente o policía de tránsito se va a hacer en una esquina mientras tú vas pasando. Por radio le dicen que está en otra esquina, a cuánta velocidad vas. Y en ese momento te van a parar. Uy, pero no les dé ideas. ¿Acaso de dónde cree que saco estos ejemplos? Es que te digo, pues, lo que te doy a ti va a ser nuevo para los conductores de moto, carro, servicio público, lo que sea. Es el pan de todos los días. Y adivina, ya estás metido ahí. G7, adelantar a otros vehículos por la derecha o entre vehículos. La G8 te va a sorprender. Y es que te la voy a leer literal. Realizar una maniobra de giro o de adelantamiento. Escucha bien. Sin usar direccionales. Uy, pero es que eso no se lo piden a los de los carros o de las motos. ¿Estás seguro? Es mejor que me sigas si quieres evitar perder tiempo y dinero. Como conductor que ahora haces parte del... ¿Dónde está? Código de tránsito. G9. No respetar las señales de tránsito. G10. Y esta ya viene con inmovilización del vehículo. Circular sin usar el casco. No, mi agente, es que me alcanzó solo para la bicicleta eléctrica, pero no para el casco. Oh, mi agente, el casco se me quedó, pero ya me lo pongo. Comparendo e inmovilización del vehículo en este momento. G11, circular entre las 6 de la tarde hasta las 6 de la mañana, sin vestir prendas reflectivas, al igual que las motos. ¿Por qué? Porque las motos hacen parte del código de tránsito, al igual que en este momento las bicicletas eléctricas y patinetas.
Freaking A, man.
¿Sí ven cómo son las cosas? 2011, donde no les exigían licencia, seguro obligatorio, ni que matriculara esa bicicleta o scooter. De ahí para adelante ya vale nuevo. Pues no, compañeros. Esto es regulación. G12, circular, sin que el vehículo cuente con dispositivos luminosos que proyecten luz blanca en la parte delantera y luz roja en la parte trasera. No es que se me acabó de fundir o preciso pasé por un barrial y se tapó. Sorry. G13, transportar objetos que disminuyan la visibilidad o que incomoden o que se vea que es un peligro para los demás actores viales. Un ejemplo, quererse hacer un medio trasteíto de cosas mientras va conduciendo, todo se comparendo. Y G14, conducir en estado de embriaguez o bajo efectos de otras sustancias. Antes no pasaba eso. Ahora, comparendo e inmovilización de ese vehículo. Hay tantas cosas que hablar sobre esta ley y todo lo que va a cambiar para las bicicletas eléctricas y scooters o patinetas. Dependiendo si este video se mueve, los seguiré orientando para que conozcan sus derechos y deberes como conductor. Y para la muestra les voy a dar un pasabocas de este iceberg donde solo vemos lo de encimita. Verifica que efectivamente la bicicleta eléctrica es una bicicleta eléctrica y no un ciclo, porque hay veces, presuntamente, te pueden estar dando como bicicleta eléctrica un ciclomotor. Dime en los comentarios si quieres que te dé una guía para que antes que vayas a comprar ese vehículo sepas qué estás comprando, ya que el argumento de decirle a la autoridad de tránsito de que a ti te dijeron que era una bicicleta no te va a servir de nada y esa plática se perdió. Segundo, la mayoría de conductores de bicicletas eléctricas y scooters, patinetas, piensan que desde que salió esta ley ya pueden andar tranquilos. Y no, comunicado de la Secretaría de Movilidad de Bogotá. Pero esto mismo lo pueden aplicar a nivel nacional, cada secretaría. Y es que en pocas palabras, aunque haya salido una ley, se le da año al Ministerio de Transporte para definir cómo se va a utilizar esta ley. Mientras tanto, las diferentes secretarías de movilidad a nivel nacional siguen ejerciendo el poder sobre eso. No es que ese avisito que colocaron ya no aplique porque salió esta ley. No se dejen confundir de otros lados. El señor Peter es la única fuente segura. Van a seguir haciendo lo mismo que estaban haciendo, con la diferencia que las infracciones ya están claras. Así que vuelvo y te lo repito. Usuario de bicicleta eléctrica, monociclo, scooter, patineta, etc. Si no quieres perder tiempo ni dinero, te presento al señor Peter, porque ya haces parte del código de tránsito de la ley 169 de 2002, donde va a ser más frecuente que te encuentres con agentes y policías de tránsito. Y a futuro, con fotomultas. Tú decides. Y según lo que decidas, pues te voy a ayudar a que conozcas tus derechos, conductor, y ustedes, obviamente. Así que el primer paso es compártele este video a todo usuario de bicicleta eléctrica, etc. Personas que sepan que van a empezar a utilizar este tipo de vehículos incluidos en el según la visibilidad. Me daré cuenta que quieres que te defienda. Hago paréntesis. Si has sido víctima de abusos por parte de la autoridad de tránsito y quieres aprender a defenderte en procedimientos de tránsito, ve ahora mismo a www.cenorbiter.com. Vamos a la pestaña que dice formación. Por solo 90,000 pesos te enseño a defenderte abogado sin ser. Son 14 módulos. Cada capacitación muy bien diseñada para que aprendas lo que tienes que saber. Si bajamos, tienes este audiolibro para que lo escuches mientras vas conduciendo o en el transporte. El valor real de este curso es de 800,000 pesos. Pero hay una oferta exclusiva hoy por solo 90,000 pesos. Realmente es un regalo, compa. Cierro paréntesis. Gracias por
Crítico independiente. Push down, maybe 6 million barrel drawdown. They were not even close to that. 6 million barrel drawdown. About 300,000. Oh, you can rally. Good job. There you go. Okay, here you go. We got your clicker ready. Try it long walk. Huge pop in crude, flipped up to $62.80. It's not this long. I got both. You want to buy it? Great ones, yeah. Looks like we get the latest. Chart. Well, as mentioned, we could get another run right here, 63.50 in NASDAQ. Yeah, guys, don't trade with me. I would like to preface that as well. I'm talking about trading for me on the market, and that can be useful for you in ways. But don't utilize anybody else's opinion as your own, right? You can't have number two people on. Yes, that try to test the match. Yes. Yeah. So you put yourself in. Yeah. Don't. Hey, I'm tempted to get any place. It grows. Right. This is why copy trading. Congratulations, close that poll. Congratulations, 57% of you that said no, the lows are not in a way that some days. Not four ES. Can't have that rate two, but it's not right. Mark. So just gonna take a look. Some of you that and convincing. Hey, I hope wasn't really convincing. Wow. No, rest Martin. Yeah. Almost kind of looking at this by this. It makes why the balls are dead. Which I'm worried. How long are they micros? NASDAQ tape? Yeah, micro. Right around 100.
All right. It's Tuesday the 19th of August, and this is a recap for the stock market activities today. First, I got a one for you tonight. What are we talking about? We're talking about Jackson Hole, Wyoming, and the upcoming speech by Fed Chair Powell. See, we have a battle coming out in the stock market right now, or you have a delusional market that is expecting right now at least 2 rate cuts this year alone. What basis? What is the emergency? Well, the market looks at the recent jobs data that said the White House that looks at that as the excuse to begin cutting rates. Even though asset prices are all-time highs, and the most speculative assets, the shitcoins, the cryptos are all-time highs, which makes no sense at all. But that's the delusional side. Or shall we say, the doves. Then we got the hawks. The hawks are looking at something different. The hawks are looking at the recent PPI data, the producer price inflation data, which was hot. And they look at that as warning that no, the Fed cannot cut rates. If anything, the Fed should be actually hiking rates higher. It seems that the dovish team, which is being right now supported by President Trump and his allies, and the media, and the Wall Streeters, and the oligarchy, and even some Fed dissenters. Then you got Jay Powell standing his ground like a hawk, at least for now, because we know that the original taco is actually Jay Powell. He tackled back in 2018, he tackled back in 2020, and he tackled again in 2022. If he tackles this time, though, it will be the biggest mistake that Sharon Powell has committed, even a bigger mistake than the transitory state, because he's going to be blamed and become responsible for the resurgence in inflation. Go back you and me, think about Jackson Hole, Wyoming, a lot of bears, a lot of wildlife, a lot of bisons, orcs. Bring the impression out of you. You become an alpha male when you go to Wyoming. So maybe Mr. Powell is going to transform into Mr. Payne. Some of you might remember 2022, Jackson Hole, Wyoming, Mr. Payne. The market was delusional. Okay, this is the end. We're going to have interest rate cuts now. Okay, Mr. Payne. and he brought the market down crashing. Of course, a few months later, he tackled. So we'll see what happens here, but let's just dive into it here first because we got important stuff to talk about. Jay Powell, of course, under a lot of pressure right now, not just from the White House. They resign Powell, fire Powell, sue Powell, jail Powell, send Powell to El Salvador. It's not just that. He's being pressured right now from the banksters, the oligarchy, and within the Federal Reserve. Why? Because we have a game where the president wants to replace the Fed chairman. Either he's going to wait, he's going to be forced to wait, to be honest with you. He'd rather fire him right now. But he's looking for a replacement. And this is why we have a lot of whores, really, in Wall Street, in the Fed. You see them in CNBC, in Bloomberg, and the business news media all over the place, trying to say me. Mr. President, me. Pick me. I'm going to be the Fed chair. I'll do whatever you want to do. You want to cut rates by 75 basis points? We'll do it. But like I said, this is now happening within the Fed. So put the pressure. Be too much for Powell to handle. And he's going to tackle and cut rates comes the month of September. Horses, because right now the dissenters against Jay Powell, not really as big as Janet Yellen or Bernanke or Greenspan or Volcker. Certainly Paul Volcker had many enemies in the Fed because they wanted to serve the oligarchy and the banksters. He stood against their way by hiking rates, and he effectively defeated inflation. We know that Jay Powell goes back in history, and he glorifies and he studies Paul Volcker. He wants to be known as Paul Volcker in the 21st century. But he can't do that if you tackle. He can't do that if you cut rates. You gotta stay strong. To be honest with you, right now, as I said before, the law of diminishing returns, that's what's facing Jay Powell right now. The longer he stays in the position, the more losses he's going to suffer. If you cut, you're going to be blamed for inflation, because inflation will make a comeback. It'll be a policy error. And if you don't cut, you'll be subject to blame again by the White House for not cutting rates. Any problems that happens in the economy, blame it on Powell. So I suggested recently that it is in the interest of Jay Powell to resign before the September meeting. Now, there is a delusional camp that says, come to Jackson speech this Friday. Jay Powell is going to cut rates. Disagree. Zero chance of that happening. Now, there is another camp that says, no, what Jay Powell's going to say is he's going to keep his options open and he's not going to commit to cutting rates in September. He wants to be data dependent. And that's what impacted the market today negatively. A lot of folks are saying, okay, pricing in 3 rate cuts comes to PPI, now we're down to 2. And with the PPI data, I don't think that Powell's going to do it. I mean, that's what he's going to do. So we have to de-risk dump stocks, especially the winners, the high flyers, as you see in today's session. We'll talk about that in a minute. But the other element of surprise in Jackson Hole could be if Jay Powell resigns. That's a possibility. He could do it. He's going to be in his best interest to do it and say, you know what, folks, thanks so much. The show's over. You take it, Mr. Trump. Do whatever you want to do. Cut rates by a million basis points. You do it. You assume the responsibility. You want to manipulate the jobs data and have your stooge cooking the data? Go ahead. You want to cook the inflation data? Go ahead. You want to cook the interest rates? Go ahead. Let's do a Frankenstein experiment in the economy. See what's going to happen. But I'm not going to be involved in it. I think that would be the best outcome for Powell. We'll see what happens. Of course, all eyes on Jackson Hole. But I want to share with you my frustration when I listen and watch the business news media these days. When you watch CNBC, it's a filthy channel either way. And Jeff Bezos is going to buy it, so what do you expect? It's going to get from bad to worse. But last year, when we had the Biden presidency, you had the liberal/democratic analysts like Steve Leisman saying that the economy is great, the stock market is beautiful, there is no inflation, the consumer is doing better than ever before. And the conservatives in that channel, like Rick Santelli and like Joe in the morning, they were saying, no, there's inflation pressure, there's a bubble going on in the stock market, this is not a good economy. And now it's 180. Now the camp that supports Trump says, yeah, the stock market is great, the economy's doing pretty good, tariffs are not inflationary, everything's beautiful. You have the other camp like Steve Leisman saying, oh no, we have all kind of problems in the economy right now. And this is why in this channel we remain consistent. We stick to the facts and the data. We don't give you the hypocrisy, the political bullshit you see in CNBC and the rest. But among the hypocrisy, which is really stunning to me, is this kiss-ass initiative that a lot of folks are doing just to win the Fed chairmanship as Trump begins to look for a new Fed chair. Among those who are kissing ass right now is one of my favorite economists, Mohammed Al-Arian. And listen to what he said today, because I can't believe this guy slipped with this man. Take a look.
You know what he might do this week or say?
think he would be inclined to maintain maximum policy optionality. And that's not what White House wants to hear. That's not what many people in the market want to hear. He's also going to be pushed on the labor market investment topic of the symposium. And then finally, and something that we don't talk enough about is the monetary framework. And this is when he unveils the monetary framework.
Do you think that it would be a mistake to maintain this optionality? Why should he do that? We just came off a week in which we got some, inflation data that was at least a little bit hot, sticky, if nothing else.
Zero. So now we're starting to see the problem with excessive data dependence. He got two different inferior. He got softer than expected CPI. He got hotter than expected PPI. He got a UMISH survey. It's flagging yellow. If you simply look at data, you get a new value of what you put in 2 months ago. It's still that's the problem with this data dependence. So again, he has the math criticism saying that the Fed is looking backward and not having a strategy and outlook, which has been my criticism against Jay Powell for a long time. He just looks at the data and then reacts. He does not have a vision, and that causes a lot of market volatility, a lot of uncertainty in the economy. But at the end of the day, what are you going to base your vision on? What are you going to base your outlook on as the Fed? Because the data is not reliable to begin with, and we know that we have stagflation in the economy. So Mohammed Al-Arian is saying that the Fed needs to have an outlook, and that outlook means that the economy is getting weak as time passes, which is inevitable, and that means they should be cutting rates right now to prevent that recession. What about the inflation risk, Mohammed? Because that risk has not been eliminated. Matter of fact, that risk is being amplified with the tariff policy, as we begin to see right now earnings after earnings after earnings. Procter & Gamble, the John Deere, to today Home Depot's earnings, all warning that the tariffs will cause an increase in pricing. Period. Full stop. What do you do with that, Mohammed? Well, you got a suggestion that, inflation doesn't matter, of course. If we say 2% is the goal, let's move that to 3%.
Okay, so they should cut in September. They should have cut in July. Okay, but they didn't. They're July's February now. They should cut in September. So they cut by how much?
You don't want to do, I guess. I would cut by 25. I wouldn't be super surprised if we get a repeat of last year. Remember last year they absolutely didn't want to cut in July, and they cut 50 in September. If you ask me, that's a 20% probability. If we get a bad labor report before the September meeting, they'll cut by 50.
What if he wants just more optionality for another inflation report?
Then we risk being later. And what we have to realize, and I don't know if this is the most popular thing that I can say, is that we have stayed inflation at 2.5 to 3%. And as long as inflationary expectations are anchored, we can live with this slight inflation as a structural side of the economy is changing.
And why?
Dropshipping is such a low upfront cost of business because although you are selling physical products, you never have to touch the inventory. Choosing the right products has to do with defining a narrow and clear niche of target customers and serving that niche with products that you can easily convey the benefits of efficiently, so that at a glance of your ads, your target customers can get hooked and feel compelled to learn more. Scrolling really big through their social media feeds. Understanding the business demands is a direct relationship between your website, your drop shipping supplier, and your customer. Your customer purchases products from your website, and your website automatically notifies your drop shipping supplier, and they pick, pack, and ship your payment directly to your customer phone. They charge you the cost of the product and the labor. You keep the margin you added on top when you customer order from your site.
Sorry, just have this pre-shoved. Yes, that's right? Well, yeah. Oh, I'm not talking about the big one, risk level, but your name is Risk Lover, so be careful. I'm just saying that next week at videos are
If we use inflation measures to use WhatsApp, the inflation rate right now would be around 6 to 8%. So I'm already manipulating the inflation data in the calculation to begin with. You want to manipulate that even by moving the goal higher. You got to remember, again, this is absolute lunacy because you got to remember back in 2020, 2021. What did Jay Powell do? A lethal mistake transitory. How did that happen? He said that we need to rescue the economy. And inflation expectations higher. Well, guess what? He did that. Inflation got out of control. So it says that we have to move the post from 2% to maybe 2.5% or 3%. What you're gonna do is you're gonna get 5% plus inflation because your accurate expectations higher. You told everybody it's okay to have inflation. You're gonna see the price gouging, you're gonna see these phenomena. The other thing is, if your case cutting rates depending on weakness in the jobs data, how do you know if the weakness in the jobs numbers, jobs market is legitimate or not? What if it is a byproduct of AI? I mean, Zero Hedge shared this chart on the SACs that are really interesting. Look at the difference between data center construction, that's in dark blue, and then in light blue you have construction of offices. You can see the trend. Offices down, data centers up. So what if the weakness in the jobs market is coming because of AI? How does cutting rates by 25 basis points or 50 basis points is going to remedy that? You ain't going to stop AI. You ain't going to stop the big corporations from adapting AI to get rid of employees. This has been the goal from the get-go. It's not legitimate ground for the Fed to cut rates. Furthermore, in this channel, I've been saying this for a while, you got to understand the concept of the duality of the risk. What you're looking at right now, the higher the bar goes, the higher the risk, the lower the risk. So right now, the status quo that we're in right now, both risks are kind of elevated more than they're supposed to. Duality of the risk, inflation and a recession. When you have both of them like this, you have a stagflation phenomenon. And the problem when you get to this stage is, if you want to tackle recession, as Mohammed Al-Arian is suggesting and many others saying the same, and you cut interest rates to remedy that recession, that's going to come at the expense of inflation getting higher. Likewise, if you tackle the inflation risk by increasing interest rates, you can exacerbate the odds for a recession. So this is the worst outcome. We've been warning about this. The Fed has to induce a recession in the economy before we get to the stagflation phenomenon. But the Fed thought that they can have their cake and eat it too, that they can begin to cut interest rates, ease the policy, and inflation would be dead. We all know that the natural remedy for inflation is a recession. Once you have inflation in the economy, it's not transitory. We have some cases of transitory inflation, like toilet paper and COVID, for example. Those don't last too long. But when you have systemic inflation, monetary inflation, blowing up the money supply and the deficit, the only remedy for that is recession. And the sooner you accept that, the better. Of course, the Fed said, no, we're got it. We can reduce inflation and keep the stock market hot, we can keep the economy hot, and there's not going to be any inflation. We're not going to have any recession. Well, here we are. Going to face the music. Furthermore, here's probably the most solid evidence to prove that the Federal Reserve should not be cutting rates at all, not even thinking about cutting rates. What do people like Mohammed Al-Arian say about this? What you're looking at right now is the price index for the ISM services, meaning pricing in the services sector of the economy. And we are pretty much dominated by the service sector. But look what's going on here. Let's go back to the problem of transitory. What was the highest reading in the ISM price index for services before COVID? It was right around 2017. We're on point right now. The moment you begin to see readings above that number, that's when the Fed needs to take the initiative, because this is one of the greatest leading indicators for inflation. And the warning sign came in February 2021. The Fed, of course, ignored it. It said transitory until 22 before they did something. And look at where we are right now. We're having readings just as close as February 21. Well, we got an inflation problem in the economy. So this is a leading warning sign that inflation is heating up. It would be absolute lunacy, absolute madness to cut rates right now. And if that was not enough, listen, Kevin O'Leary, he makes the case of, why the hell would we cut rates when you have the shitcoins of all of these assets at all-time highs? Take a look.
And as you said, if you drop the rates, you're going to spike these asset classes, including risky bonds, even higher. We try to fix right now. So if I'm Powell saying, wait a second, cylinders are firing. We don't have a problem here. Now, if there's going to be a cut at all, max, it's 25 basis points, but I am not investing on that basis. I think you may, and he'll just say, look, the data's coming in hot, we're not cutting, and I know I'm getting whacked, so I'm not worried about it. Deal with it.
Anyhow, I'm concerned that Jay Powell might be a little competition. He's not going to buy any case for screen cuts in September. Comes to the Jackson Hole meeting, seeing the market trading negatively today. On top of that, we're beginning to question this whole AI bubble. Even Snake Sam Altman is now admitting that we have an AI bubble, he says, forming. I say it's blowing up right now. Spending, no concern at all, just spending. And then ask questions like, which will be, by the way, the nail in the coffin for a lot of these mega cap technology companies. When they realize that they're spending all these billions and billions and billions of dollars on initiatives that are not going to produce anything really, that the Chinese are beating their ass, doing AI with a lot more efficiency. But anyhow, this was also part of the concern today while the market sold off at least the big names, the technology names, and the semiconductor names. Because we also got another report. You gotta remember, NVIDIA, we talked about the NVIDIA affair, and how the Trump administration said, yeah, sure, we can sell the NVIDIA chips to China so long as they get 15%. And we sell the outdated H20 chips. I don't think they're outdated, by the way, but that's the case. The White House outdated. Now we get a report that NVIDIA is now going to develop a twin chip that are Blackwell. It's the latest version, the top of the tier agreement with Profit. And what NVIDIA is doing is just downgrading these chips a little bit to bypass the regulations and the restrictions for exports to China. And the Chinese will take these chips and tweak them a little bit, and then they're going to have the same capacity and capability of the actual Blackwell chip. Now, of course, NVIDIA doesn't really care about national security, about who's going to win in AI, about even NVIDIA itself in the future, whether it's going to be disrupted by Huawei and other Chinese companies. All what NVIDIA cares about right now, when I say NVIDIA, it's really Jensen Huang. All what he cares about right now is money. And he knows if there's any restriction of selling chips to China, NVIDIA's stock is going to crash right away. And NVIDIA's stock is right now worth almost $5 trillion. It's the highest weighting of the S&P 500. Imagine having a $5 trillion blow up in the market. The market is going to crash. Of course, Jensen Huang's not going to be able to sell shares or buy mansions, an island, and tigers, and doomsday bunkers. So the source of concern from this piece of news is, what would the White House do? Because the White House said no Blackwell chips to China. H20 okay, but not the Blackwell. So how would we see the reaction of the White House? That's going to be really interesting. So we see today, the market decided, you know what, we need to trim some of these gains. We need to book profits and de-risk. So you saw, this is a list that I watched for many stocks, just a sample here. The biggest decliners of the day happen to be the high momentum names, the retail investor names that have been flying high regardless of anything really, because it became a gambling, a casino since April. So you see names like QuantumScape, like Palantir down about 10% today. Names like MicroStrategy, Peloton, HIMS, AppLovin, Coinbase, Reddit, all of these high flyers are being dumped right now because what if the Fed doesn't cut rates? You cannot justify the respecting these names. You have other names, a little bit of a higher quality like KTOS, but also was a high flyer, so it needed to be sold today for profit taking. What kind of stocks are working in today's session? You look at the gainers. How about Intel? We talked about this a few videos ago, that my bet is the White House wants a piece of Intel. A couple of days later, we got the news that Trump wants a 10% out of Intel, and now he has his buddy in SoftBank buying 20%. So we see Intel flying high. So buying the stock was the correct choice. We also see names such as Wynn Resorts, Neo, MLCO. We see names like TCOM, a Chinese company. All these Chinese companies. Despite this year, we've been concentrating on China in my portfolio because these names continue to move higher. And if you're looking for value and the possibility for growth, it is in China, not here. So this is why we see these Chinese names moving higher. We see some of the laggards, some of the dividend-paying names, the defensive stocks, as I'll show you in the heat map in a second. Those names tended to outperform today, so it was, at the end of the day, a risk on to risk off rotation based on the news that we got from Sam Altman, from NVIDIA, that hey, there are questions here about the AI bubble. But most importantly, of course, is Jackson Hole and Jay Powell. But if he throws cold water with interest rate cuts, that's what impacted the market negatively today. Now let's segue to the morning brief and do a little bit of a strategy review, because today you can pause this and read it for your own. But I talked about, I want to look for names that can bypass the tariff. Meaning, they can do price gouging because of the tariff and get away with it. So I noticed that stocks like General Motors, for example, GM, it's supposed to be a victim of the trade war, but it's trading pretty good if you look at the chart. So it caught my eye that Toyota could do the same. And Toyota been lagging the Japanese stock market. So why not grab some shares of Toyota and set a stop loss at 190 just in case it goes down? So that's what I did today. Another company is Xenia, ZGN, luxury fabrics, and the customer who buys these kind of suits and fabrics, not really price sensitive. If they jack up the price, they're still gonna pay. So they can get away with some price gouging. This is the chart that I gave you for TM Toyota Motors. Daily chart. It looks like an inverse in a shoulder. Today we closed positive, just a tick, nothing major really. So we'll see how this is gonna play out. And here's the chart for ZGN. Weekly chart. You see a similar inverse head and shoulder pattern. If I'm right about this, it should be working out and we see higher prices to come. But if I'm wrong, I'm going to cut my loss at 760. If we trade below that number, okay, we're violating the inverse in the shoulder pattern. Nice try, but goodbye. We also revisit the morning brief from yesterday. And again, in a nutshell, I said that if you look at the mini futures for the S&P, I think we have a correction coming from a rising wedge pattern. So we went with the weekly 640, 635 put debit spread in the SPY, and we paid about $1 for those. But right now we're up about 60%. We'll see what happens, but if there is more de-risking before Jackson Hole, my expectations is the trade will be even more profitable. So we'll see what happens and give you the updates, of course, on a daily basis on my Discord live streams. You know the deal. But let's add more color to this conversation, folks, by revisiting the market activities today, beginning with the closing of the indices, and here we go.
¿Me puede traer la cuenta, por favor? ¿Cómo así? Pedí un montón de cosas y la cuenta total es $0.
Ahora sí entiende cuáles son los verdaderos beneficios, ¿no?
¿Cómo así?
¿No eres tú el CEO de Temu? En tu anuncio dijiste que te podía comprar una cámara. Pero dígame, porque yo no la conseguí.
Nuestra promoción es totalmente real.
A mí no me vuelven a engañar.
¿Será que descargaste la app por el enlace incorrecto? Inténtelo otra vez. Descargue la app de Temu desde el enlace aquí abajo de este video y puede conseguir la tablet o portátil por $0.
Wow, es verdad, ya lo conseguí, pero ¿y es de mala calidad?
Leaving all the indices together right here because you know that the Dow Jones is a reflection of the risk of rotation, the value stocks outperforming. You see the Dow outperforming the NASDAQ that we have. The Dow was just a tick positive today. The NASDAQ, on the other hand, was leading the way to the downside, down about 314.82 points, so a loss of about 1.5%. So the NASDAQ is saying, hey, a lot of the managers, a lot of the investors, the traders say, let's take some profits, let's de-risk. Because who the hell knows what's going to happen? Of course, the S&P is another technology ETF, so live and die by NVIDIA. And it goes down with the NASDAQ. The Russell 2000 small caps more impacted by interest rate expectations. And recently we've seen a big pop in the Russell 2000 after the jobs data because everybody anticipated that the Federal Reserve is going to cut rates. But now as we begin to face the music and we account for the PPI data, maybe Jackson Hole, Mr. Payne Powell are going to cut rates. This is why we see those expectations of interest rate cuts coming down with it. The Russell 2000. But the sectors. In a day when we have a defensive rotation, we see that the laggards, the losers, led by technology, services, energy, cyclicals, all down for the day. What's moving up though? The defensive sectors, dividend paying, good valuations in real estate, consumer defensives, in utilities, and healthcare. And expand on that when we look at the heat map bond. How about the breadth? The NYC was close to 50-50, a touch positive, 54% advancing, 45% declining, so the market maker exercised maximum pain when it came to the NYC, meaning the majority of the calls and the puts expired worthless. In the NASDAQ, though, the market maker had to squeeze a little to the downside and assume a little bit of loss. So we see 31% of the volume was advancing, 65% was declining. This is evidence. The market maker was not expecting a decline, let's say below 642 today in the SPY, but it happened. So they had to sell the SPY in the NASDAQ and assume a little bit of a loss. Now we look at the heat map. Here it is. What's in the red? The high flyers, the momentum names, the technology names. So you have NVIDIA down by 3.5, AVGO down about 3.5, Broadcom, AMD down over 5.5. Microsoft, Oracle, Palantir down about 10. You have Google, Meta, Amazon, Tesla, Netflix, AppLovin. The banks, the Robinhoods of the world in financials, the Coinbases of the world also in financials, the data center plays in utilities such as CEG, VST, Vestra, and in industrials, VRT, Vertiv, all of these data center plays, all down for the day. De-risking, take the money out, take the profits. No need to be cute here when you have uncertainty coming from Jackson Hole. Among the names that got sold, gold miners. You see gold miners and basic materials down for the day. Why did that happen? Because if JPOW is hawkish, he's not going to cut interest rates in September. Then the dollar is going to rebound higher. If that is the case, not going to be good for commodities, not going to be good for gold specifically. So we see that investors today have rotated toward value, dividend-paying stocks. So you see in financials, you got names like Berkshire Hathaway, the insurance names doing pretty good. You look at healthcare. I'm still a fan of the healthcare sector, although I'm not a fan of the ETFs because they're heavily weighted by UNH. I don't like UNH. Told you that at the beginning of the year. But you look at the big pharma names doing pretty good. You look at the exception, of course, of NVO and Lilly. Don't want to get engaged in that game because the Ozempic bubble is popping. But you look at some of the names in diagnostics like Thermo Fisher, which we've seen some highly unusual activities of buying the 500 calls, and we see the name surging higher since then. If you look at medical devices, we have Stryker, SYK, offers a lot of value. You have ABT Abbott, and you have MDT Medtronic, which was down today because of earnings, but it could be a buying opportunity. You see again the value names in industrials, such as the trash names, waste management, the railroads. That's based on the speculation that we're going to see M&A or we're going to see some mergers happening in that sector. We see real estate, of course. We have interest rate in the long end of the yield curve. That's the caveat, by the way. In this defensive rotation that we've seen today, does real estate make sense? Do home builders make sense? I'm not sure about that, because what if JPL comes out hawkish? We see interest rates, meaning yields on the short and the long end of the yield curve moving higher. If that happens, then you see real estate down, you see the home builders down. So these two are not my favorite rotations into defensives today. Utilities, the classic utilities like Dominion, like Duke Energy, those are okay. We own some of them. The defensives into staples like Philip Morris, Mondelez, PepsiCo, Procter & Gamble, Coke. These are okay, but you gotta be selective. You gotta look at earnings, pick the highest quality of those companies that are gonna be resilient to inflation, cost pressures from the tariff. They have the ability to pass the extra cost down to the end consumer. In cyclicals, you see Home Depot lows going higher because of Home Depot's earnings today. We look at O'Reilly, AutoZone, ACO, these are defensives. In cyclicals, you got McDonald's, another name that is pretty good. We have defensive rotations. In comm services, nasty. You got the classic Verizon, T-Mobile, AT&T, Comcast. Those do pretty good in a day like today. To be honest with you, if you want to see a defensive rotation, I'm going to pick some of the healthcare names, maybe some utilities for now, but that's about it. I'm not going to be cute to buy real estate or home builders. I think we have a lot of uncertainty that interest rates could go higher in the aftermath of the Jackson Hole meeting. Moving on to commodities, we see red across the board. We got the meeting with Putin in Russia. We got the meeting with Zelensky in D.C. And so far, we have no deal. But we see commodities going down either way. We see that gas down about 4.5. Palladium, which Russia is a big producer, down. We see wheat down over 5%. Why? Because expectations that the dollar might pop higher in the aftermath of the Jackson Hole speech. You see coffee futures surging higher. We talked about this a week ago. The coffee's a buy because of the Brazilian tariff. So we see coffee up about 4.5%. Unbelievable surge in the price of coffee recently. Now we see soybeans down. And today we got the news that U.S. soybean farmers are now urging Trump. You gotta make a deal, man. You gotta ask the Chinese, the Japanese, whatever deals you're making. Don't give me the fugazi numbers of what Japan is gonna use $1 trillion. That's not gonna happen. Give me something tangible. Ask Japan to buy some of our products, to buy some of our agricultural products. Ask China to buy some wheat. Ask China to buy some soybeans. I mean, soybean prices are going down even though we have the surges in the soy boy population. Why? Because we have no trade deals in reality. And the other reality is we're screwing up a lot of our markets. So, for example, we're driving China to buy grains from Brazil now, being hostile to Brazil, being hostile to China. And now we're driving the Indians into the arms of China. And India is now saying, we're not going to buy U.S. wheat. We're not going to buy U.S. soybeans. We're not going to buy U.S. anything. We're going to buy this stuff from China and Russia. You got to remember, India and China not the best friends. If anything, they're kind of enemies. But now we get the piece of news that China says India is a partner, not a rival. And you see that the foreign ministers, China and India, met. Is it really in our interest to push India into the arms of China? Or is it in our interest to strike deals with India, with China, with Japan, to buy some wheat, some soybeans, some corn from U.S. farmers? I think the answer is clear, but we have a chaotic policy right now. You're going to hear more on that when we talk. We have a bonus video if you happen to be a member of the channel. We're going to cover earnings from Deere and Home Depot and cover the tariff impact, but you're going to see unbelievable stuff when we talk about Deere's earnings. So stay tuned for that one. Big casino, the options market, what do we have here? The volume is a little bit on the higher side, but it could be because of de-risking, buying some puts before the Jackson Hole meeting. Anything that stands out, we see volatility beginning to move higher in NVIDIA, so we could see more declines to come because the IV rank is moving higher. It's not close to 100 or 90 or 80, the elevated levels we say, okay, we have a top, so we could see more declines to come in NVIDIA. Same thing with Palantir, down about 10% today, but the IV rank is about 23%, so you would see more declines to come in Palantir. Intel went down a little bit, cooled off the high volatility, now moved up by about 7%. You see the IV percentile at 63%. That could go up to 90, so we could see more upside when they come to Intel. What is the difference, by the way, between IV percentile and IV rank? IV percentile is the measure of time. IV rank is a measure of actual volatility. So usually the IV rank is a better indicator to pick bottoms in corrections. When we get, let's say, 100%, 90%, and you close to the bottom, you want to close your puts. The IV percentile works better when you're trading calls. For example, you get the open door technology. The IV percentile yesterday was almost 100%, so no wonder why we pulled back today. So we get the IV percentile elevated. You're probably reaching close to a short-term top at least. Keep that in mind. Now, let's look at the options expiration all the way till Friday and study the gamma right here. And you can see that we have a call wall at 650. That's out of the way right now. It's going to take a miracle for us to go 650 again. But look at the gamma flip. The point of the gamma flip is 642.80 with SPY. Today we closed a touch below 640, which is, by the way, the blue ball too. What does that mean? The risk for an inverse gamma squeeze is highly likely. If that is the case, now we have to look at the gamma exposure. The biggest gamma exposure for the puts, the column in yellow, is 640. We closed below. If we see more selling to show up tomorrow, then we're going to visit the next highest put gamma exposure, and that's going to be at 635. Again, these numbers change every day because every day we have volume changes in calls and puts. But right now, this is what it looks like. Let's move on to the unusual activities. How about bullish ones? HSB, App Lovin.
Ya están abiertas las inscripciones para la Academia de Trabajo Virtual, la escuela online que ha ayudado.
They bought the 430 calls. Still paying at 410 right now. The expiration date is September 19th, spending about $1.25 million. So they're aiming for 490 or above by September 19th. I don't know. What do you think? This chart is looking weaker here, and it's pulling back, and I think it might pull back even more, so I'm not a fan of this trade right here. How about some of the unusual ones, maybe insider kind of trades? TNTH, another speculative biotech play. Somebody bought the 25 calls. The expiration date is October 17th, 2025, spending about a little over $1.25 million. You look at this chart right here. This trade, by the way, was initiated yesterday, not today. And today we see a big pop in the stock. We're above the 200 days moving average. We have higher lows, so maybe they know something that you and I don't when that report comes out. But as in any biotech play, they can have insider information that by a certain date we're going to have a trial result or some sort of an announcement. But they don't know if it's going to be good or bad, so it could be a crash once earnings come out, as we've seen in Vikings Therapeutics today. Just keep that in mind. It's worth playing it with a little bit of money, speculating on a pop, but you don't want to spend too much. Here's another one for you that's highly unusual, also biotech play, MLTX, Moon Lake Immunotherapeutics, whatever the hell that is. Probably a cover-up for an Epstein operation, but anyways, in this case, they're doing a bulk call spread by buying the 60 calls, and they sold the 80 calls for the expiration date of September 19th, 2025, spending about $800,000. You look at the chart, I'm not a fan of this one. Let's do the bearish activities. How about CRDO, bear call spread? meaning that you're selling a call and you're buying a higher call as your protection. You're basically betting that from this point on, the stock is heading down, not up, so you want to collect some premium. In this case, they sold the 125 calls, expiration date September 19th. They bought their hedge, their stop loss, at the 140 calls, also September 19th. All in all, receiving a premium for a little over $1.25 million. So this is what it looks like. They sold the 125. In case it goes higher, they bought the stop loss of 140. Right now, it looks to me that the chart is heading down, not up. So I think they have the right call here. Then we got a really interesting one. A long put on the 2-year T-note futures. What does that mean? If you're buying puts on the T-notes for the 2-year, you're betting that the 2-year yield will go higher. Why would the 2-year yield go higher? Because interest rate expectations are dampened. How the hell would that happen? Jackson Hole. So here somebody bought the 104 puts. The expiration date is September 26, 2025. Spending about $2 million betting on higher interest rates. Hawkish crowd comes Jackson Hole. The last one I got for you for the XOK, this is the technology ETF. It covers the big cap technology stocks, which could be a hedge, by the way, but even if you want to bet against them, you don't want to pick the individual names one by one. You can just short the XOK. And in this case, somebody bought the 250 puts for the expiration date December 19, 2025. Right now, the XOK is trading about 263-ish. All in all, spending about $1 million. Let's do some charts. We begin with the E-mini futures 2 hours chart for the S&P 500. We talked about support number 1 was 6,453.25. That's broken now. We see a little bit of a mini support showing up right here if we zoom in a little bit more. You see the reactions that we got right around here, let's say 6,420, which we're trying to reclaim at the moment. And if you zoom out, you'll see that we have in the hourly 2 hours, this chart, we have a little bit of oversold conditions. What I would see maybe a rebound overnight, just a little bit to cool off these oversold readings, and then maybe head down later on when we open the opening bell. Here in the US, we see another revisit. If we do that, we have support number 2, that'd be 6,390. You got to remember, if we zoom out, so long as we're trading above 6,350, we have the bull right here. What does that mean? It means that the dips will be bought. If we break this support, 6,350, then we enter the gray zone between the bull and the bear, which is going to be a decision-making zone. Now, if we decide to go down and break 6,240 what the bear is, then we can see support right here, and again right here, and again right here. So if we end up going down there at some point, we break that, then okay, we have a market that's probably going to begin to deteriorate really fast. And we have a bearish phase resuming in the market. Right now, one step at a time, folks. We'll take it one support at a time. And for now, 6,420 is the number. If we rebound a little bit, then break it again, I would say the assumption is probably going to be at least 6,400 coming out really soon. And by really soon, I mean as soon as tomorrow. How about the Russell 2000, RTY, mini futures? What do we see here? Still looking pretty good, by the way. Still the possibility of maybe a flag breakout. But that depends, of course, on interest rate expectations. If the market begins to push the 2-year yield higher, anticipating a hawkish bout in Jackson Hole, I think that the IWM will begin to lose a lot of steam and head down and revisit this conjunction right here of the 50 moving average in blue and the 200 in orange. The Dixie, the dollar, will be impacted by what Jackson Hole Jerome Powell says. And right now we have a series of higher lows. Yes, we went down after the bad data that we got. Now we're coming back up. So could J. Powell firm up the dollar even more, get us back to 100 again? That's a possibility. What does that mean? It means that the old man gold will suffer a little bit. It might go down to 3,300, even 3,250. That's a possibility. We're not going to freak out until we get to that point and close. But right now, it could cause a pullback and go. How do you play a hedge against your gold position if you assume that the dollar is going to go higher based on the hawkish bound? That liquidity down below. Possibility. What does that mean? It means that the old man gold quite a few levels down below price. Might go down to 3,300, even 30. Somebody asked you that's a possibility. We're not gonna freak out until that. You say liquidity. I mean, sellers above, buyers below. That I'm looking at on the book side, not made up liquidity because I think this is talking about what I would consider actual real liquidity. Okay, hang back, guys. I'll be right back.
Stuff. That's like straight on. Take this off right here. Going to add, like, get a little fill. Oh, give me the fill. Maybe I'll let it run. Hang on. This is it's not good. What I got going on is I got window inspection. I got stuff going on. These guys keep interrupting, which is okay. I appreciate everybody helping me out of my house, but I'm just not gonna be able to manage this one. So I'm gonna take this, guys. I'm gonna take it off right there. 330 across accounts. Maybe this thing just reverses to the moon, but I can't manage it anymore. I really don't like to be cleaning in stuff if I'm super duper distracted and I have to continue doing things. I can let it run with take profit and stop loss, but I'm just gonna go ahead and take it here. I appreciate you guys hopping on. Sorry that we got a W. Can't complain. One break even. One break even, small W, and then W for the second one. Continuing the win streak this week, all green, no complaints. Sorry that I was in and out today a couple times, but it's just part of owning a house and trying to have some stuff done. But I'm not just gonna keep running back and forth and take it off. Probably gonna watch it run through VWAP. Be a nice trade, but I'm hella distracted. I'm not gonna be able to manage it well, so take it off. Appreciate you guys hopping on. Thanks for being here. Thank you guys. financial advisor. Nothing necessary to do is financial advice. Do your own research, make your own trading decisions. Read CFP 4.41 on simulated trading, which is what this is, even if funded proper accounts. Make sure you read the affiliate partner disclaimer. It's not getting no money. Accounts that I'm trading. I'm gonna throw this in here before I wrap it. Top one future, 50% code RDF. Here it is in chat again. Better than the email, better than the Discord, better than the website, better than anything you see. Against everybody, man. You want to support me, support yourself. There it is. Just like I said, I'm partner, I'm affiliated. I got to be transparent about that. I stand to make money, so I can't be unbiased. Do your own research, make your own decision. Like I'm partner with pretty much anybody. I'm part of the top one, was a hella bullish on this opportunity. You guys want to hop in the free Discord? The Discord is everywhere. Discord is everywhere as well. Thanks for being here, guys. Sorry that it was a little bit interruption. Can't complain about a W. Can't complain about catching longs and getting out for break even, and then trying it again and getting a W. We'll see if this thing runs, and we'll see about the difficulty sometimes of being distracted when you're supposed to be trading and fully focused on. Thanks for being here, guys. See you live for 3 p.m. Power Hour, and then tomorrow 9:30 a.m. Eastern. 100% for. Talk to you guys soon.